Hey guys, how's it going? It's Andy. There's a lot of new faces around here, so welcome to the channel. I'm talking about a video today that I made back in March of 2020, and Google and YouTube have been pushing it pretty recently, and up until recently I thought it was a fine video. It did all right, got a pretty good response when it came out, but now I'm seeing that I made a big mistake, and people in the comment section have been pointing out an important part of this story that I missed. And so I make mistakes, I think that's totally fine, but I wanted to come on here and explain the mistakes that I made and have a better explanation of what was going on and how you can avoid a situation like this in the future. Because the story we're talking about today, this is a net profit of $45,000 from investing in the stock market that turns into a tax bill of $800,000. And at first that seems like a doom and gloom situation. And in that previous video, I didn't talk about how you can get out of that situation because the article that I read the first time didn't talk about that, and that is 100% my mistake. So if you ever see me talk about a topic that, maybe I missed something really important about the discussion or the stock, be sure to leave it in the comment section down below because I do make mistakes and I want to correct the mistakes when I make them, and I'm very appreciative of the people that let me know in the comment section down below that I did make a mistake. Also, before we get started, I really appreciate it if you hit that like and subscribe button. Around 90% of you guys aren't subscribed, and I'm trying to hit 10,000 subscribers, and the channel has been growing for the first time in like a year, so thank you all for that. So as I mentioned, 2020 was a fantastic year for investing in the stock market, especially growth stocks did incredibly well. Stocks like Tesla were up 740% in the year, and growth stocks were the area that people were investing in aggressively and did incredibly well after the stock crash that we saw at the beginning of the year. And during that time, you have a lot of stories about people that are just getting involved with day trading and making a lot of money. In this story, the person started with around $30,000 in cash and used 3-to-1 leverage in their investing account to give themselves a buying power of $90,000. They average around 10 to 50 trades in a day for the entire year. That's a lot of trading, with average trades being between $200,000 and $2 million per week. That's a lot of money. And by the end of it, they had a total transaction volume of $45 million for the full year, and that resulted in a net profit of $45,000 by the end of the year. And then the person went to go do their taxes, as we're getting towards tax season right now. They put all the information into, TurboTax or whatever they're using, and it said that they owed $800,000 on a net profit of $1.4 million. So what happened? Because if you've never heard of this rule before, and obviously they don't talk about it in schools, you'd be pretty surprised. So the person called up a tax expert and they're like, oh yeah, you got hit by the wash sale rule. So in this video, I'm gonna be talking about what happened to this person, how you can avoid it, and how you can fix it, because people make this mistake, and in the past video, I didn't explain how you can get out of it, because at that point, I didn't know that. Also, I've linked some articles in the description about the wash sale rule so that you can do more research if this is something that you're dealing with right now and not just listening to one person talk about it on the internet. So the basic idea is that you buy a stock, you sell it, and then within 30 days, you repurchase those same shares. There's some discussion about the wording is nearly identical. So if you buy shares of like Brookfield Renewable has BEP stock, but there's also BEPC, which is the corporate shares, which are pretty similar. So I think that would count for the wash sale rule, but it's nearly identical stocks. So if you do that within 30 days, the loss that you had from that trade is going to be not allowed on your taxes. So let's say you had a net loss of $10,000 on that trade, but if you bought it back within 30 days, that net loss is not going to count. And so you can't turn that into your net profit. So that's what this person did, is that they were buying and selling the same stock over and over again for the entire year, and it got rid of all of their net losses. And so the way to avoid it is, obviously, if you're going to be buying and selling a stock, wait at least 30 days before you do so, before buying it back, to avoid this rule. But as people mentioned in that situation, I didn't get the full story. And there is a way to get rid of a wash sale rule, and the way to do that is to wait within 30 days, because the net loss that you took on that trade is going to be added to your cost basis. So if you sell it after 30 days, your cost basis is going to be significantly higher. Then you can use that loss that you had on that trade to offset the loss that was washed. The problem in this situation, and the reason why I think I was partially wrong, but also partially right in that video, is the person didn't realize the mistake until after the new year. So at that point, they weren't able to sell their shares after 30 days to get rid of that trade. So I might be 100% wrong. You can let me know in the comment section down below if you think so. But I think in this situation, if they didn't realize the mistake until January, that wouldn't be effective on their previous year's taxes. So unfortunately, we are in February, So it's possible that some people are going to get a rude awakening in a couple weeks when they go to file their taxes. So in the future, if you realize that you've made a wash sale, I know some brokers will send out an email about it. Sometimes you can go to your portfolio and it'll let you know if there's a wash sale. If you do that, I'd highly recommend calling them, asking for what their advice is, and most likely they're going to tell you to sell it after 30 days so that you can take a net loss off of your added cost basis. But I wanted to talk about another topic that I thought was very important after this video started resurfacing and people started talking more about it. People were commenting down below, asking for advice on what to do with their tax situation. And I think it's really important that if you're in a situation that you're way over your head, it could be taxes, it could be investing, it could be moving, as I'm now in my girlfriend's new place because she had to move and we hired movers and it was significantly easier. I think that if you have the money available, I think it's always better to spend some money and talk to a professional. Don't be asking for advice on your tax situation on the internet. Talk to a tax professional, someone that does this for a living and that fully understands the rules and can explain it to you in a simple manner. Asking for advice in the comment section down below is the easy way to go about things, but in this previous case, I didn't fully know the rule and I might have told people the wrong things. I've since gone back to that comment section and deleted comments and reposted them. So I think it's very important to always talk to a professional if you have very important questions, especially on taxes. Another key takeaway that I wanted to bring up is that overtrading is a serious problem that people face as they get more involved with the stock market. When I first started investing in the stock market, I thought day trading was so cool. You know, you're spending time in front of the computer, you're watching all these charts, and you can make some money from it. In this situation, the person used 3-to-1 leverage to give them buying power of $90,000. That's great, but I think realistically, if this was any other year besides 2020, they probably would have had an overall loss and not a net profit of $45,000. Overtrading has a huge part to do with emotional trading. You see, maybe you had a losing trade and you want to get right back in there and you're like, oh, I lost $1,000. Well, now I need to make $1,000 to get that back. Overtrading is a serious problem, and I think it's something that as you mature as an investor, you're going to do less and less of, and that's why I've slowed down and I've moved to dividend stocks where I'm only buying and I'm not planning on selling anytime soon. So I think that's a huge takeaway, is that overtrading is a huge problem. If you do have a mistake when it comes to, your taxes, talk to a professional and don't ask about it on the internet. This is a situation that could be avoided if you know what the wash sale rule is. So make sure you do your research on your taxes before you get a rude awakening as we go into tax season in the next 2 months. If you made it this far, I really appreciate it. If you hit the like and subscribe button, as it would help my channel grow. Thanks for watching. Let me know if I made any more mistakes in the comment section down below, and I'll see you in the next video. Thanks for watching.